This podcast is for informational and educational purposes only. It is not investment advice, financial advice, tax advice, or a recommendation of any kind. All views expressed by the host and guests are their own and do not represent the views of their employers or any affiliated organizations. Information discussed may not be accurate, complete, or current by the time you hear it. Nothing said here should be relied on without doing your own research or consulting a qualified financial professional. Investing involves risk, including possible loss of principal. Past performance does not guarantee future results. By listening, you agree that the host and guests are not responsible for any decisions you make based on this content.
Welcome to the Wealth Workshop. Whether it's investing, retirement, or building generational wealth, we're here to simplify it all. Thanks for tuning in, and I hope you enjoy this episode with your host, Terrified of AI.
Hey everyone, welcome to this kind of one-off episode of the Wealth Workshop. I'm Terrified of AI. For those of you who haven't tuned in to any of the other episodes, I had to cancel the podcast a little while ago because life got in the way a little bit, but felt the need to try to get another episode here in at the end of the year to talk about some of the macro things that are going on and what 2026 might look like and how 2025 could wrap up, and have a bunch of smart people that I'm talking with all the time. So in today's episode, we're going to have a roundtable type deal, and we're going to have Alloy, CarlyBme, and oh God, this is going to be, I always say mphinance. I feel like that's wrong. Is that right?
I really don't know what's right or wrong.
All right.
I mean, if you really want to know, so like my initials are MPH, and I was being lazy and I wanted to reuse my initials, and I've been doing that now for my company, for usernames, you name it. So
Well, there we go.
It was just
Because quick blurb before we get into it, the last person I interviewed was Tron. And back before he changed his name to Tron, it was Tronathan. But my can't reading ass called him Tronathan because I'm literally can't read. So I was about to have another one of those. But anyway, I'll give you guys a couple minutes.
That was like a month or two after I joined, by the way, and
I know.
got to know you without. It was
yeah. After the call, he's like, "It's actually just Tronathan." I'm like, "Oh my god." But anyway, so I'll give you each a couple minutes to introduce yourself, give a little bit about your background, and then we'll dive into it. Let's just go kind of on my screen. It's left to right, so we'll start with Alloy.
Sure. Hi, my name's Dylan, a husband, father. I go by Alloy in the digital world. The most accurate description of myself could perhaps be summarized by excruciatingly handsome, absurdly funny, and impossibly humble. I've been trading and investing actively for the better part of a decade. I was mentored by a figurehead in volatility research. Thus, I blended myself in a timeline where I spend a lot of my time researching geopolitics, domestic policy, and volatility regimes. Because of this dense reliance on information, I'd characterize myself and like as an investor as sort of a deep value sort of dip buyer. To tide myself over, since obviously I spend I depend on pretty large time horizons to gain conviction on new positions. I trade SPX on a daily and weekly basis. Professionally, I am a machine learning researcher. I've spent the majority of my career working with customer data and in quantitative analytics departments, bolstering or creating risk models in the finance and defense industries. Individually, I am the founder and developer of Prism, which is a software platform, and the community, both in their infancy, surrounding the tools said software provides to primarily retail traders and investors. On that note, I've been remarkably blessed to spend the majority of my time each day talking to people of diverse backgrounds to learn as much from them, and if not more, than they learn from me and each other. And that's it.
Awesome. All right, Carly, if you want to give a quick background about you and kind of what your background is and history and how you got here.
So I'm CarlyBme. I'm the VIX queen. I've been in the game for a while. I worked in the industry in the early aughts, and I was actually a part of the machine that created the GFC. I started at BNP Paribas and then moved over to Bear Stearns and left Bear Stearns about a year before it collapsed. I knew what was coming, and I guess I was a bit fortunate in knowing what was coming because I traded the VIX during the GFC and built myself a nice little nest egg, and took the money, invested in myself and some real estate, an education, and kind of became a businesswoman and then ultimately an educator. I'm guessing I'm probably the oldest of us. I am now an analyst in the kingdom. I kind of try to focus on the women because we are a underappreciated demographic in the retail trading space. And I came into social media. I'm not a big fan of social media, but I came here to learn about retail traders. Because I come from smart money, I view everything through the lens of smart money, and it can be to my detriment because I don't understand the retail trader. So much of it's not traded on fundamentals, and I have a hard time grasping that. I would consider myself a macro trader. I like to trade commodities and yields and FX. So I work pretty much in the ETF world, but I've been trying to hone my skill of the dumb money trade, and that's what brought me to AH, and now here with you, fine gentlemen.
Awesome. Yeah, I actually started off every episode of the podcast pretty much saying the same thing, where I have very little experience with like retail traders and all that, but I found it fascinating. So that was my selfish reason for interviewing a bunch of quote unquote retail traders, um, who were actually pretty good at it. So I learned a ton just by interviewing people. So I completely relate to that side of things.
Yeah.
All right, Michael, take it away.
All right. Yeah, I'm Michael, or let's go with mphinance or mphinance, I think is Chief likes to try and pronounce it. But I believe I am the second oldest, so thank you, Carly, for being the oldest. I appreciate it.
Glad to
I
make the
started
sacrifice.
off. I started off my career. I graduated just before the financial crisis, so it was a few years. I was managing bars and restaurants for a couple of years, so I didn't start working professionally until 2010. And really, my break came when my what do they call assistant controller left my company. So the company was Merge Healthcare. It was since bought by IBM, but so when my assistant controller left, they elected not to replace her. So I kind of got thrown in, and I about accounting and corporate accounting and all that fun jazz. And I've mentioned a few times about being in the rooms with the CFO and marketing and stuff, and how earnings can be manipulated. So that was kind of my huge, I guess, wake up call. So when I left that, or I went to Johnson Controls for a few years after that. Wasn't, I guess, quite as high up there, but it was still a really good experience, a lot bigger company. Yeah, so that was kind of my accounting one. JCI got rid of our entire accounting department, so we had to train our replacements in Bratislava. Let's see. I got a job then in data analysis. It was actually doing job costing, so it was partially using my accounting background, but also jumping into the technical side. And kind of fast forward, I did data analysis and data conversions and a whole lot of SQL work and stuff like that. So not quite as fancy as what Ally did, but I did risk insurance at the very end. So I was doing data conversions and stuff like that, where I would just take all the third-party stuff and convert it. So nothing too fancy there. I'm still trying to figure out what I am called now. I am the, I guess, owner and whatever of Momentum Finance. That is within the last week, and I guess I'm a professional writer now. But I have been trading full time for the last year. Got funded in March, I think, something like that. Kind of kept doing that for a little bit. I'm not doing that much anymore. I spent time in the Prism and the Kingdom and pretty much all of the other Discords. I love them all. Let's see what else. So I guess trading, investing. My real trading background began with Bitcoin in 2014, 2015. I lost a lot of money in altcoins. I guess I did learn about retail as far as how to get ripped off and what bad discords look like, all that fun stuff. So that's why when I started on After Hour, I kind of started, just poking around the different discords and stuff like that, just to warn people of the ones that weren't so good. I still can't keep up with Prism. I'm not a day trader. I'm not that good at it. I realize that I'm much more of a swing trader. I'd say my big investing moment, or when my big light bulb moment, was in 2018. Was visiting my grandma down in Florida, and she told me that she had more money now than she had when she had retired. And my grandma retired with like 100 and some odd grand in her early 60s. And I was there for it. I was going to her house every day. So that was kind of my big, so how the hell did you do that? Now, she did get lucky. It was the early 80s, and stuff like that. But anyway, I think I got everything. So
Cool. All right. Awesome. Well, I appreciate you guys all hopping on here. I'll give just for people who hadn't hopped in, um, I'll give a quick background about myself. I have about a decade, a little bit over that, of experience in um, the financial advising world. So not necessarily smart money. I know a lot of people think their advisors are like smart money people, but smart money would call advisors retail as well. Um, right, Carly? I'm pretty sure that's true. Um, but
And go ahead.
no. But joined After Hour to get an idea of how true retail was trading. And um, once I got in there, I saw a bunch of these groups and kind of gravitated to the people that I felt like knew what they were talking about, and started interviewing people. And I kind of used my decade of financial planning experience um, and portfolio management to get a sense of who's knows what they're talking about, and who might be getting lucky. Um, and one of the reasons for that episode is to get the people that I feel like aren't getting lucky and get them to talk about kind of what the future might look like in the next year or so. Um, so with that, I guess we'll talk about the best place to start is kind of where we've been so far this year. So just really briefly, um, I'll kind of just give an overview. We're up. SPY I think is up about 16% year to date this year, but that was after that massive drawdown of Liberation Day. And one of the reasons I wanted to have specifically Alloy and Carly on here were because they're very much volatility traders, or deep. Alloy said deep value, so that as well. But one of the most interesting years of all time from a volatility perspective. I don't know if you guys have stats off the top of your head about that, but I know that the 3 days after Liberation Day were three of the top five volatility days of all time, at least in the past like 70 years. So that was a really interesting start off to the year.
I think my biggest note for volatility has been how much the behavior of the VIX has changed since then. I really think that retail traders and zero-dated expiration traders have changed the behavior of the VIX. Smart money, I think, is hedging differently as well. They don't use the VIX as much as they did when I first started trading it. I think ETFs have made a really big difference with the leveraged inverse, the bear type of ETFs, it's you could probably equally not win, I shouldn't say win, make as much money trading the short side of the VIX as you can the long, and that wasn't the case like when I first started trading it during the GFC. So that would be my take on volatility this year.
Yeah, I'm glad that Carly spoke first because that's a great jumping off point. I think we're in a multi-year regime right now where quantitatively there's no debate that zero DTE provides liquidity that suppresses volatility on the long-term horizon, right? When people are able to hedge more dynamically or on shorter time frames,
Yep.
we end up reflexively suppressing volatility as a part of that process, which I think is a great tool. There's sort of a can of worms there. It's like, have we even reached the ceiling of what's possible in terms of reflexivity? Probably not, but I'm not going to kind of go down that rabbit hole. But yeah, I would agree. VIX is pretty difficult to trade in terms of downside catalyst at this point because, and I've talked about this within the community, but downside moves get priced in very quickly now. So volatility, while by definition, of course, is an abrupt situation where information gets priced in, and then we sort of have a correction on downward behavior, sans recession, sans GDP stagnation. Of course, there are some circumstances where predictively you could argue that a bear market is around the corner. Barring any situation like that, right? We have these events that get priced in very, very rapidly. Even more than in the past. And so for that reason, VIX is a delicate instrument. And I think Carly, from a very high level, said something that's going to be useful for everybody, which is that you can make just as much, if not more money shorting it because these events get priced in so quickly. So maybe bookmark that.
And I think that retail, and I'd be curious your thought on this, I think retail has one of the biggest influences on why that is. And they're going to be probably what I'm watching the most because they have exponentially grown in a very quick time frame since COVID. I mean, the amount of funds that they trade on an annual basis exponentially grows year over year, and they're really becoming a true player in trading. So I think they're having one of the biggest changes to the VIX. It's my
It's one of
opinion.
it's one of those things where I want to say yes, and I agree personally. I think that you're right. The data scientist in me is like, okay, now let's see like the proof of that. But here's what I know culturally, right? 5, 8 years ago, there was a debate about the impact that retail had on markets, and there was a pretty diverse group of opinions there that you could fetch. One of them from the Merrill Lynches of the world would say, we got it pretty much by the ear. We don't think that they're making a big impact, or if they are, it's insignificant. And I'll say this: I don't hear that debate anymore. I think everybody, whether they're they're outspoken about it or they're keeping this opinion in their back pocket because they don't want to,
Admit
uh,
it.
yeah, they don't want to. Yeah, they don't want to end up with egg on their face because they said something different 5 years ago. I think everyone is willing to swallow the pill that retail en masse is creating a really big liquidity shift in markets. And I again don't want to say anything without evidence mathematically, but I would be surprised if they weren't the reason that volatility gets crushed so quickly, or at least they're not something that dealers are reacting to. I think would be more than fair to say.
Yeah.
Yeah, I agree with all of that. All of that. I think just to add a little bit of my business's perspective in as I think that retail is smarter when they come to talk to me about managing their money, um, compared to where they were 5 years ago. They the general knowledge base when they come in to talk to me is substantially higher than it used to be around these more complicated subjects. I mean, once you get past stocks and bonds, usually it falls off, but that's changed in the last few years. And then on top of that, I think on not just retail, but I think the increase in structured product flow has also had a massive impact on volatility, because they're using options to offer these structured products. And with valuation so high, there's a huge demand. I see it not only in my business, but in other businesses and wholesalers coming to talk to me about how do you hedge against this downside risk with a large book of business where you can't just use options necessarily from a scalability perspective, um, unless you have certain tools. So what's a different way to do that? And a lot of the solutions are massive flows to structured products. I know me and Alloy both like listening to Jem Carson, and he talks about, like, I think it's 5 trillion of flows into alts in the past couple years, on one of those alts being those structured products. So I think that's having a large impact on VIX, and I think it's changed a lot, like you said, Carly. So completely agree.
Yeah.
So on top of volatility, we had massive volatility in the beginning of the year, and it's pretty much been a slow grind up from that Liberation Day with a couple other events here. If we exclude the past month has been, or maybe since the end of September, has been super interesting. But it's really felt like it's been also all about, as we're coming towards the end of the year, pretty much all about what the Fed is going to do. So that's been an interesting dynamic, um, around rate cuts and Trump. I said on prep for this meeting, we can't get too deep into Trump, but we can talk about a little bit where
You can't
he seems to be
ignore it.
pressuring Jerome and Jerome Powell, and there's seemed like there was a little bit of pushback on not a lot of data, but it's been interesting. So wondered if any of you had any kind of comments around kind of cuts um, and kind of what happened leading up to where we are now, maybe through the summer when there was a lot of name calling, um, and how you think the Fed's handled rates so far this year, because we got cuts at the end of last year too. So
Well, I think right now everybody's on watch for when and who will be the next, because that's going to absolutely change the dynamic. Because for one, the market will already start to price in their anticipation for what happens next year, and it makes Powell a lame duck, and it will change the behavior of the other committee members, the other voting members.
completely
So, I
agree.
mean,
And I definitely
that
want to have a larger discussion around the Fed. Um, but how do you think they handled kind of cuts so far? I know the meme is too late, Jerome, which is
yeah.
not even a good insult. But do you how do you think they've handled the rate situation? Because I wouldn't have
Well,
wanted his job.
I was going to say it's an impossible job to have, and particularly when we are living in a world with two very different economies. And so trying to find a neutral rate that works for these two extremely bifurcated economies is just an impossible job. And it it's just hurting that lower economy, and everybody just seems to be ignoring that economy. The markets certainly are, but that the K-shaped economy, that upper arm, is driving everything. They're driving, consumerism, they're driving GDP, they're driving the stock markets. So, lower rates would certainly help the lower arm, but you can't ignore inflation and the tariffs.
Yeah. Um, I think for me, one of the biggest ongoing discussions we're probably going to like see in history books related to this era that we're in. At least from a quantitative perspective, culturally, what's really going to change, I think, is, traditionally the Federal Reserve, right or wrong, has been a backward looking organization in terms of data, which makes
Yes.
sense. Yeah, in a largely decentralized statehood like what we've got, we expect reporting figures from a lot of different sources, and the Fed, again, traditionally, no right or wrong, has worked very hard to collate that data to make a decision. Um, and I'll share my view about what's right, or I'll give my maybe disagreeable opinion here. But if you've been paying attention to the rhetoric lately, it's really interesting to me that there's this great push from Besant, Trump, and others. For those who are still learning about these sociopolitical dynamics, Besant is
Treasury
a
Secretary.
figurehead. Yeah, he's theoretically next up in line. Hopefully, this doesn't age poorly, but theoretically, he's in line to replace Jerome. Um, and like they're spreading this rhetoric around fast as anything I've seen in a you know an organization tied to the government. The cultural shift that's happening and within just 1 year to be forward looking instead of backward looking, i.e., turning the Federal Reserve into a speculative machine, I think is going to be something we talk about. Economists are probably reluctant to talk about, but it will be a topic of discussion for many years coming forward. And I think I don't want to drive the conversation off a bridge, but I do think that this is very aligned with modern monetary theory, which is like very briefly like this idea that if a government controls a dominant currency, that it can kind of just do things however it wants to. It can operate on debt with more flexibility. It can it offers more freedom, and it's more of an optimistic way to view the printing of money. And whereas traditional economists would say that we shouldn't tempt inflation, we should use taxes to pay for public services in a stepwise incremental fashion. Modern monetary theory suggests that, hey, like we control the currency. We don't need to worry about debt for its own sake, because as long as we're improving GDP and other related numbers, we can print because it's going toward more productivity. So some things start like these things that we're taught to worry about, like internal revenue in capital systems within the Federal Reserve and treasuries, and of course the United States government, start to matter a little bit less. And then GDP and these numbers that Carly was talking about, like liquidity in markets, consumerism, et cetera, these are the numbers we start more dynamically trying to alter with policy measures. And I think that the decision to look forward instead of backward is a step in that direction. Now, my opinion, I think Jerome is a celebrity in my world as far as I'm concerned. Big fan. I'm not going to go into why, because he's a titan, and what Carly said is accurate. Like it's an impossible job, and so in some ways, I look up to an individual like that who I'll end it here. I think one of Jerome's best quotes is something that keeps echoing throughout the statements of other members within the Treasury and the Federal Reserve. But one of his best quotes is, when we don't know what's next because of the amount of change in government, it's a lot like walking into a room that's dark and that there's a coffee table in. It's only a matter of time before you run into you hit the coffee table. So we have to walk what that means is we have to walk very slowly, and we have to be very careful until the lights turn on. And he's anyways, I'm really proud that we ever in our country's history had a Federal Reserve chairman like Jerome. That's what I'll say. As far as looking back, awesome. Yeah. I'm so glad to be among friends in that way, because it's a temporary leadership position, and we're going to find out in a good way or a bad way who's next. So we better appreciate him while we've got him. That's my take. And as for backward looking versus forward looking, oh, look, as a speculative trader, I see the appeal in in a forward-looking Federal Reserve. I think we know a lot of the time that there's a discrepancy between what people are, paying for groceries and car loans and mortgages versus job numbers and all these other things that we do have to wait a little bit longer to get a criteria and a sort of a definitive, um, a scope and an understanding for. But I guess puts me at pause is the motivations for turning the Fed into a futures machine. I don't think populism is a big word. Hopefully we don't. I'll end it here. I don't think populism and an an alcoholic's approach to lowering interest rates. You know what I mean? Like I don't think rushing to provoke a velocity of money is the right reason to be a forward-looking Federal Reserve. So I think it's all about the context, and I think that we could be in hot water here soon if the wrong people are in charge of policy at the Fed. And I'll leave it at that.
Do you want to add anything, Michael? I know these two are hard to follow. I struggle following what
No,
they're
that
saying.
was amazingly educational.
I love when these guys talk to me. The thing that I'll add to it, kind of my 2 cents, is I think that there's a ton of pressure on Powell, and like I said from the beginning, I wouldn't have wanted his job. Like you guys said, it's an impossible job, and I think I had like 3 or 4 after-hour posts where, like, especially right now, they are being pulled in two separate directions from their dual mandate, as in terms of unemployment and and inflation, and rushing through these decisions. I feel like there's so much pressure for them to rush to cuts, and I actually applaud them for not rushing it, because I think you could have easily made an argument to start cuts in probably August. If I think July would have been too soon, but probably August. But they took their time with the data, and I think that was a better call. And I think they took their opportunity recently to kind of flex on Trump, and there seems to be a different, at least there seemed, while the government was shut down, to be a different kind of power dynamic going on that has then flipped back, because it's all about, this leads into the next question I had for you guys, but how much do we think the next Fed chair is going to matter going into Q1, right? Like, obviously it matters when they're actually in the position, but we're announcing it, what, 5 months early, maybe 6 months early, I think. And there has to be a reason for that. So I wanted to get your guys' thoughts on who you think it will be, versus maybe who you think it should be, and how that might affect markets going into the beginning of the year.
So I'm going to jump in with a short reply because you made me think of a thing there. I would not want his, I do try and find the best in people, and regardless of any mistakes that are made, when should we do rate cuts and how big are they? I would not want his job at all. If I were him, I would have left a long time ago. And the only reason somebody like that stays is because he wants the job done correctly. And I at least give him that. Yeah, it's the worst job in the world. Beyond that, I would love to hear what they have to say. So.
Well, I think Terrified, you and I have the same in who we would like to see or who it should be, and that's Waller. I think Waller would keep the independence of the Fed. And I've watched quite a few of his interviews where he talks in length about this bifurcated economy. And I think that's really is on his radar. I think he would at least attempt to address that issue, but I think it's going to be Hassett now. I feel like Trump is all about, but confirmed Hassett in just the last few days.
Yeah.
And there was a headline today that Bessent's now probably going to be running the Economic Council. So I think it's Hassett. and I think it could be dangerous.
Yeah, nothing unique to add there. I agree. Waller is currently known as the hawkish member of the Fed, but I think it's just his statements thus far have been appropriate, maybe not welcomed by markets at times because a lot of what he's saying is sort of established and he sticks out like a sore thumb. But what he's saying is agreeable and middle of the road as far as privatization of the Fed goes. So I agree with what Carly said there, and I think it's all but certain that Bessent is going to get the pick. I do think it's dangerous. I think
Wait,
that
real quick, are you
you know
saying Besant, like Scott
Bessent
Besant,
or
or
Haskett?
Hassett?
uh, I think Bessent is going to be the winner.
What? Michael, didn't
Yeah.
you say that at one time too, that you thought it would be Bessent?
I would actually love if it was Besant. If he
Really?
gave up
Who
his
just
It was
other
not me. It
roles.
was one of your favorite people that used to reply on you, Science, that said
Oh.
that.
Yeah, I would love
And
if it was Besant if he gave up his other roles. I think right now the market thinks it's going to be Hassett. I think these are really
yeah.
close names, so I hope people are understanding. Um, I think
I think
um, Besant was the immediate pick back in the summer and like who the market thought it was going to be, but he came out a lot of times and said he wants to stay in Treasury. I think he actually has more control over like what the White House can do if he stays in Treasury rather than um, Fed chair. But the market thinks it's going to be Hassett, Hassett.
Yeah.
yeah, I'm familiar with Hassett's dovishness and his willingness to do whatever Trump wants
Yeah,
with regard
Yeah.
to cutting rates. I think um, I suppose maybe I could be a little bit more conservative about the guess and say that for me it's 50-50 between the two. I know
I would love if you're right. By the way, I would love if you're right.
I have mixed
he
feelings
had
about Bessent in
he's
that
played a
position.
yeah, he's played a really clever gray area on the fence position for the Trump administration in terms of he's been tasked with selecting for this role, and he stayed largely out of the conversation, except to say middle of the road statements. And I think that it's sort of a it's an out of left field guess, I admit, but I think Hassett is dangerous. Rapid rate cuts quarter to quarter are all but guaranteed. Um, if
And just
Hassett wins,
terrible.
Yeah, I don't think that would be good.
what
No,
I
it
hear right
wouldn't.
now, I don't hear a lot of agreement from Wall Street about Hassett. This, I think, is sort of a latent amount of pressure on the Trump admin to reconsider that's currently not being factored in as much. There's this narrative that he's going to do whatever he wants, but he does. There are some constraints around the administration. They've got a lot of people to make happy, as with any presidential admin. I think it's just um, there's probably a way to please multiple parties at once here, something more diplomatic internally, and I think Hassett is a little too obvious. But I am fully willing to admit that I could eat my words here. The obvious bet is Hassett, and I'm kind of taking the road less traveled by suggesting the bulwark of all of this, Bessent, could be a sneaky way to get what Trump wants as well, without a lot of people freaking out about it immediately, because people are freaking out about Hassett. Just maybe a conspiratorial take, but we'll see very shortly.
Yeah, I think they're probably going to announce it soon, and I do agree with that. Just from I think that today, I don't know who if you guys saw. I think you saw it, Ally, because I sent it to you. But like at some point today, a lot of like bond investors, like the bond market, pretty much came out publicly and said, "Do not put Hassett at the Fed chair. He's going to ruin the bond market." They all but said that. So the projections that I'm looking on Poly Market right now, and it looks like Hassett came down 12% just today off that news, like likelihood.
Oh,
That's
okay, great.
interesting.
Kevin Warsh is second at 14%. He's up 6%. Christopher Waller's third, and then Besson is fourth, but like they're neck and neck. So Kevin Warsh seems to be the runner-up. I'm not as familiar with Kevin, but I would love for it to be Besson. But regardless of who it is, I think what we can all kind of agree on is that what Trump's been screaming, and correct me if I'm speaking for you and I'm wrong, but what Trump and the administration have been saying, where it's like, we need to cut, we're too late, we need to keep cutting. He throws out crazy numbers that I won't even say here because they're so unrealistic, but
Really?
cutting a 0.25% quarter after quarter will be bad because there's only so far you can go. And if you do it incorrectly or too soon, it's going to be bad. There will be unraveling and inflation comes back and then you have to hike and then.
Yes, it will
So I
be
think we're all in
disastrous.
agreement there. I don't think we need to spend too much time on like why that many rate when we can get into it a little bit later. But I did want to talk about how do you guys see the Fed chair kind of impacting? Do you think it really is like whoever's the Fed chair, the whole Fed kind of follows?
No, that's my quick answer.
Yeah, I think I probably would agree with that too. It depends upon, I think, who he puts in there and who stays. Because there's already been, all right, so we replaced one recently. I can't think of the guy's name. It was the Trump guy. And they said that he's going to be temporary. Maybe somebody can help me with the name. It was a recent.
Starts
I
with
mean,
an
we
M.
haven't had a lot of.
I forget his
What
name
was
too.
that?
It starts with an M. I forget what his name
So,
is again.
Mirren,
Yes.
Stephen Mirren.
Oh,
Yeah. So, but he's been kind of touted as temporary, but we know he's a Trump guy. Bowman maybe said she's leaving. One of the women is going to be leaving. So we know that will be another Trump replacement. And then you just wonder if he were to put in somebody like Hassett and now Trump becomes more involved with this, perhaps some of the more conservative or the independents becomes an issue, start leaving, and all of a sudden the voting member picture looks very different. That would be the only thing that I'm thinking that could really change the whole voting, because it is so easy to think that the chair means so much, but they are a voting committee and nobody has more votes than the other.
Yeah. Awesome. Cool. So yeah, again, we've talked about the Fed a lot, and I think we're going to probably keep touching on them as we go through the rest of this discussion. But I wanted to move on to kind of away from the Fed necessarily and more what they're looking at. Because I think ultimately what they're looking at is what's going to drive markets, and they're going to make decisions off that. But we haven't really seen a ton of inflation from tariffs show up in the data. And I don't know if the data's bad or it's just buried deep in there, but I haven't seen it in what I look at. Substantial tariff inflation, kind of what they were talking about. But everyone seems to think it's still on a risk that's on the table. So I wanted to get your take kind of on the inflation picture.
Really, the only place that it showed up is the PPI side, but without, I'll try to keep this apolitical, but I think we're perhaps not seeing the full picture. I'll just say that.
Yeah, and even unpacking the PPI, like let's just talk about that for a second, right? What if we're talking about America's strength? It's in two categorically what differentiates us from other economies, and this is a geopolitical conversation. This is not an America in a vacuum conversation. Rate cuts, in fact, even
Yeah, not even. It's
and everything.
geopolitical too. I agree.
Yeah, it's 100% in a global economy. Thanks, Clintons. In a global economy, and I say that without irony, right? We are. This is globalization is real. Okay, everyone. This is the world we're in right now. We are competing in a world post internet, post long term or long distance air travel. We are a global economy now. So when we're talking about rate cuts or consumption, like our consumer markets, we are competing with China, increasingly, of course, Canada,
Mhm.
um, Europe, Japan, and just a bunch of our allies as well. I'll leave it at that. And so when we're talking about inflation and its characteristics, I think a couple of things are worth diving into a little bit deeper. And yes, a tinfoil hat might come in handy because we don't have any there's no tree of data that we can work with. We have PPI, we have CPI, and we have what people say on the street about what they're paying for groceries, essentially. But what we know is to go back to my initial point, two main strengths within America that differentiate us from other countries, right? We have very loyal consumers, very strong consumer markets, no doubt, at least for the time being, knock on wood.
Mhm.
And then we have giant corporations that, for reasons related to lineage, are have their tentacles all over different markets. Like whether you're talking about Dole, Coca-Cola, Lockheed Martin, software companies, right? Like WhatsApp. We are so entrenched in economies all around the world to the extent that we could actually export inflation as a Federal Reserve or as a world reserve currency. We are massive, right? So it's PPI and CPI. Those are the big numbers here. What we see is there's this massive delta or discrepancy between PPI and CPI. To me, the story is very clear. I just don't know how long it can persist. Right now, producers, companies are footing the bill. There is
Yep.
a tariff inflationary dynamic, but right now, companies, again, tinfoil hat on my head right now in this following statement. I don't have evidence of this, but my suspicion is that companies are saying to themselves, as long as we can foot the bill longer than other countries can while we export our inflation, the consumer will still buy. We have large cash reserves. We can look forward to quantitative easing. We can look forward to lower interest rates, which is in the same bucket of QE, and we will find our way out of this while other countries struggle in comparison to us. So what producers are doing is they're betting on the consumer. Um, that's great news. I think that is truly demonstrably the power behind the United States and our world reserve currency status. When does it go wrong? When consumers find out what things actually cost.
Yeah,
An
brother, you're
example.
opening all the doors to everything on my list right here anyway, so keep going.
Beautiful. And I'll end it here, right? So anecdotally, there's been a couple of situations that have set off mine. It's really minor. I'm a consumer at the end of the day. I'm not a producer, right? I make software and that's about it. That's the extent of my, I'm a net consumer like every other human being on planet Earth, right? But I was really interested in buying a camera recently. And I went looking, I did some product research, and I found out Fujifilm is like the best, right? And I know very little. I know more than I did 3 months ago, but I still know very little about cameras. And so I was looking at Fujifilm. I found like it's a very good camera. So I saved up money for it, blah, blah, blah. I go into brick and mortar, I go online, et cetera, et cetera. I can't find it. And when I'm talking to people, they're saying Japan is not shipping us Fujifilm cameras anymore because the tariffs, they don't know how to price it. They're either going to price themselves out of the market in brick and mortars by suddenly introducing crazy restrictions for consumers by raising the price $500 or $1,000, or we're not making them at all right now, Fujifilm that is, because we have no market as a result of these changes. That was a very small red flag for me. Again, in a world where lumber and steel and copper and there's so many bigger things than a DSLR. But that was a red flag for me, realizing that, like, hey, one of our biggest trade partners is not shipping one of their, it's not just a random company. It's one of the best camera manufacturers in history. They're not shipping their high-end gear over here to the United States. So yeah, we've got Nintendo Switch. Sure, we've got, LG televisions from Korea. But when it comes to high quality manufactured goods, certain companies are just saying, no, we're not going to ship that over to you because there's too much uncertainty around our margins. That was a great combination of dynamics that told me that there are companies that are not a part of that political game of PPI and CPI internal numbers that are just saying, we don't have to play that game. We're not going to play that game, and you're not getting our products. So I, over here as a consumer, did not buy from a Japanese company, which the United States doesn't care about too much, but also I don't have a camera. I still didn't buy it. I can't find it anywhere. So I'm cameraless. And I'm stuck here using my iPhone to take pictures of family and et cetera. So it is affecting things. And that to me is like, what if it gets worse? What does that mean for us? Where do we get this? Where do we get that? If there's any problem with these things, it's going to fall apart very dramatically. And I think there's a lot of intervention there preventing these things from happening. I'm not legitimately fearful, but it's a little bit of a taste of what could happen if things get out of control. So I guess my point is PPI and CPI for markets daily and weekly and monthly. We really want to know when producers are no longer footing the bill. And there are big consequences if they stop. Consumers don't know what things cost right now.
Well, and I will just point out what I view as a huge red flag. We're not getting CPI for October, and there's no reason why we shouldn't. The jobs report I can understand because the really fucked up way that they collect job data is, they send out emails and they send out surveys and stuff. So that's something that you need real-time data. CPI isn't. You just go get the data. And to me, it's a red flag that they aren't releasing that they just canceled it. That kind of seems like that could be a concern or should be a concern. So we don't know what consumers are paying right now. We don't know the truth of it right now.
Yeah, completely agree with that. I do think it has a lot to do about when the producers will stop footing the bill, and we'll have to see when that comes. But you open the door, so I'm going to take it. And just because it's been in the news a little bit, you brought up Japan. Japan is thinking about raising rates. So I think it needs to be on people's radar. And I don't want to dive into it really deeply because it's a complicated subject. And I can talk about it if you guys would prefer. But the yen carry trade seems to be somewhat at risk with Japan. Seems like we are pushing Japan away a little bit, and the US backstop for Japan is not as strong as it might have been before. So they're starting to see some inflation higher than they were expecting, and they need to raise rates. And the yen carry trade seems to be at risk as they're raising rates and we're cutting, because it's just going to be kind of a two-way pull in opposite directions on how that carry trade is affected. Didn't know if any of you wanted to add something to it or how you feel about it. I know it's more of a global macro picture than necessarily it might seem on its surface level.
Oh, I agree entirely. I think it's quite literally like a departure, right? If you picture two boats that are sort of lost at sea, right? And there are big headwinds. Like the ocean and the winds together are trying to move both boats, and because they're in mysterious circumstances, all they really know is as long as we're right next to each other, we can communicate, we can work together, and we can figure this out. Imagine if the United States cut its anchor and just started drifting away from Japan. That's what it feels like is happening to me. Again, on a global stage, inflation is relative. It's a strange statement, but if you have quote unquote runaway inflation in your own country, as long as the inflation is not as bad as a neighboring country or a competing economy, it's okay. Relatively speaking, it's all comparative at the end of the day. And of course, I hear now what you meant by this is leading right into my next question, because now I feel the urgency to say we have been exporting our inflation to allies that have put it up with it, because whether we're installing military bases or there's trickier circumstances like the way they're treating our tech companies. Right, there are a lot of kind of handshakes and sociological things going on there, but we export our inflation to other countries, and they put up with it for various reasons. And it's getting to a point where, looking forward, Japan has, in my humble opinion, taken a rightfully conservative approach by raising rates for the first time in like 8 years,
Yeah.
significantly. Um,
And it's
right,
not
and
that
so
much. It's a quarter of a point. It's not like they're like crazy hikes. It's just crazy compared to zero.
yeah, it's crazy compared to zero and their history, and also compared to what we were just talking about doing, which is like, what is Trump trying to instill a party that removes the Fed's independence from the United States government and the executive branch. So it is like a lot, like just picture two boats alone at sea drifting apart suddenly after 30, 50, or 70 years of working closely together. It's a big change, I think, in macro terms. I think there's something underneath the waters, going back to the ship metaphor, that explain this behavior. And I hope I'm wrong. I hope honestly the relationship between the Japan and Japanese central banks and the United States is healthy, because I know how important they are to our financial system and our markets. I'll leave it at that. And as an aside, or maybe the main point, uh, if the carry trade between the USD and Japan's currency doesn't leave enough room for arbitrage, I believe the carry trade will help China. I think that the carry trade will tilt more in the other direction toward the east, where borrowing the Japanese currency to fund or to pour liquidity into China for one thing or another, whether it's their equities markets or land development or real estate, becomes increasingly likely. That is my fear long term.
I completely
That's an
agree.
interesting theory. I I have because I think I'm of the opposing view with the yen carry trade, and I believe it's being overly speculated on. Um, as far as people thinking that there's going to be a crash like there was the first go around, but Alloy, that's really interesting, in its relation to China, because that just brings a whole different aspect to it. I'm
Yeah,
going to
and
ponder that for a while.
I think it's an
Now,
interesting thing. Sorry, I'll let you go.
no, please go ahead.
So I just wanted to give some context to it. I'm finding something different right now when I'm just looking at it. But as I was kind of prepping for this, because I agreed with Carly on the fact that like we just had this yen carry trade shock last year. It has literally been a little bit over a year. So how could we not be more hedged? But I think in my research, and I'm not seeing it right here because I didn't take good enough notes because young babies. Um, but I'm pretty sure the number is something like 17 to 20 trillion globally tied to the yen carry trade. Um, so that's not an easy thing to unwind,
Mm.
especially if you think it might continue to work. So I think the shock might be less, but I think it's still on the table when we're thinking about what could cause potential deleveraging. Um, and I think there's a lot of different reasons why it could happen, like Ali was alluding to. But I just wanted for people to understand there's more assets tied up in the yen carry trade than there is liquidity for gold in the world. So that might give some perspective to how big this thing is. Now I hope it's more hedged than it was this time last year.
I guess my thought of it is just simply at the heart of it, its effect on the markets. And because it did happen relatively not too long ago, and the markets saw what happened, that, the markets trade on the future, that either it is hedged or I just don't think the market reaction would be the same to where it's something that retail traders should be all that concerned. And then, of course, my other opinion is if it does crash, great, volatility goes up and trading becomes fun.
And Carly
Selfish.
is swimming in piles of cash from her VIX trading.
Exactly. That's my selfish view on it.
Anything to add, anyone, to it? I don't want to spend too much time on it because I think it's a really complicated subject matter, but because it's been in headlines and I've seen it more, I felt like we had to at least touch on it.
I think it's something to keep an eye on for the future, right? I agree with Carly that I don't know if it's blown out of proportion, but if I go look up headlines, I'm sure I would disagree with a lot of clickbait, right? I'd find a lot of it. And likewise, truthfully, it's not going to impact in retail investors or traders anytime soon. There are some deep historical relationships between Japan and China. Japan's got a lot of guilt there, as we know. Japan and Russia. A lot of people don't know this, but there are some northern islands of Japan that have Russian names, right? That is a bartering chip. If you're Russia, you can offer those islands back to Japan. Like I'm telling you, if you look at a map, you'll see the Kuril Islands. Kuril is Russian, but they look very geographically like they are part of Japan. They're not. That is a concession for Russia. Okay, Russia can offer the Kuril Islands back to Japan in exchange for what? I don't know. It's something to keep an eye on. What do we have to offer Japan at this point except exporting our inflation? There's only what if to tie things together, what if PPI finally indicates companies are fed up, large corporations can't incur the costs anymore and guarantee their own survival? Talking Warren Buffett timelines, right? They start to get worried about the next couple of decades with their cash reserves. They're not tech companies. I'm talking about 3M. I'm talking about Caterpillar, things like that. Okay, and then imagine if margins aren't protected, the consumer starts paying more, and then our consumer is not supporting Japanese companies like they were, right? Imagine in that situation that SoftBank stops investing in United States tech companies because China tech companies start to look more attractive for one reason or another. There are some dynamics at work here that can provoke a I'm doing so much work to avoid the phrase new world order, okay? But um we 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 should be very cautious of our flexibility to export that inflation, or else our allies might choose something that is better for the long term. And we are a very young country. So, tinfoil hat off my head, I will leave it at that.
And I'll tell you, that word allies is a word that I tend to use with my air quotes now because I think the definition of that word has changed so much in with this new administration. And I think that is has the potential to be a dangerous situation as well. And I would agree that Japan is probably in that group of we should be careful how we treat our allies, with my air quotes that you can't see.
Yeah, 100%. Fair weather friends, right? When the weather is good, everyone's nice. When the weather is not good, we find out what's really going on. And the weather is, it's a little overcast right now. Maybe bring an umbrella.
Mm-hmm. Yes.
Awesome. So, on to the other side of what the Fed looks at, right? We talked about inflation a lot here, um, and rates. But the other thing they have to look at is the labor market. So I wanted to I liked having the idea of Michael in here and Alloy to talk about kind of unemployment. Right now, unemployment is at what was it, 4.2, I think, 4.2, as of the last report that came out. I know jobs data is a little bit lacking right now. We got some bad news on jobs today, but it with cuts, the theory is that there should be more money and more potential for investing to create more jobs. If I'm really simplifying it, right? So how where do we see unemployment going? And I might be biased because my name's Terrified of AI, but I think there's a lot of pausing on hiring in a lot of fields, not necessarily every field, but in a lot of fields because there's this kind of wonder child out there that maybe can make your managers way more proficient or easily replaceable intelligence jobs. So there's maybe not firing happening yet. I mean, we're seeing a lot of layoffs, a lot of large companies, but wanted to get your take on maybe how AI might be affecting unemployment and where we might see unemployment going, as it's the other side of the dual mandate.
Yeah, and I'll jump in here and give Alloy a break. Yeah, and it definitely was the white collar freeze I referred to as once. But yeah, I'm definitely, I was laid off a year ago. Now I was granted miserable at that job, and there's a whole nother mess of things that go in. But my, I guess, day to day at the end was I would get data files from clients, and I would create an XML schema file to tell our SSIS how to read it. So Carly, I'd tell a system how to read it, and then the automation would start, and it would schedule. Basically, they would keep entering their data over here, and I would magically, make it over here, and it would pull reports and all that fun stuff. So what I used to do, like creating that schema, reading their files, especially when changes were made. I don't know how some of the people that used to work in my department are still working there, to be honest with you, because if there's anything I've learned in the last year not working, it's, how to use AI and how much time I was wasting. It is so much faster. Now, yes, you do need to make corrections. Now, I don't know if we were recording at the very beginning. Carly mentioned that anybody can be a coder now with AI. You do still have to understand some fundamentals, the if then else. You got to be able to prompt it correctly. It's not just prompts, but anyway, yes, almost anybody can, especially for something like ETL, which is just the loading data, transforming it, loading it, whatever. It is so much faster now than it ever used to be. Is it perfect? No. Like, even Google is not great at using its own Google Docs or Google Sheets yet. There's still a lot of work to be done there, but just for simple file manipulation, and I'll relate it to this kind of stuff quick, and actually I can give Alloy a pat on the back. One of the things I did for years was I would copy and paste the option chain, and I would paste it into Google Sheets, and I would create this bubble thing of the open interest to kind of visualize it. And I've been doing it a long time. I don't need to do that anymore. I can just read the option chain, and I kind of get that visualization in my head. But Alloy goes and creates Prism. That's what turned me on right away, because I used to spend an hour or two, each week doing that, depending on how many stocks I was doing. So this guy, he saw the same thing that I did, as far as that part goes. But that kind of stuff is so much faster now. And one of the things I do now, that I used to spend a lot of time on, is downloading different ETFs. So that's where I learned Python, was just to scrape ETFs and their holding files. They do have to post them every day. But I know when they change their files, it takes me 30 seconds to prompt AI to make the changes to my Python, file, with their column changes, or if they added headers or just stupid information. I don't even have to open or look at that file anymore. Prompt it, and it'll make the changes for me. and it's just so much faster. And then I can put in, like I do 5 different income ETFs, and it keeps adding, but I can just drop those 5 files in, compare all of these, let me know what holdings are similar between them, what's not, how many VLOOKUPs that as a financial planner have you had to do over the years, in Excel? And I don't have to do those anymore. I can just drop those in. So at least that part of it. Now, from a job perspective, yeah, certainly I looked for jobs really hard after the, and it was tough. And it's gotten to the point now where like I still apply for a job every now and then when it looks really interesting. Really, really did. And there's actually 2 jobs that I had applied for now, but both of them are just standing out there with applications submitted, and that's over a month ago. All the jobs are still posted, so I don't know if they're just posting jobs for the fun of it. Yeah, so it's really interesting, but getting callbacks or to even talk to people right now is pretty tough. So I could go down a whole rabbit hole about AI, the whole technical side of it, and I won't, but it's tough out there for white collar, especially coders, but a lot of that data analysis, any of that stuff, reporting, any of that. So there again, reporting, I can tell Gemini to create an infographic and it does a pretty good job of it.
Yeah. And
Yeah.
obviously not everyone's gonna like lose their job, right? I think there's more like if you
Right.
scale all the anecdotes you just gave and you scale that out across all the white collar workforce, while there's this other narrative that blue collar has a massive shortage, I think that companies are hard pressed to not see where this is going, especially if things are getting tighter with PPI, right? Um, so I don't know where unemployment goes from here, and maybe Alloy, you had stuff to add, and I know that I kind of know your opinion of the job market. I don't know if I fully agree with it, and maybe I have it wrong in my head, but I know if you're like mega talented, right? Like I know you're always doing job interviews, right? But spend 5 minutes listening to this podcast, you can tell everyone here is mega talented. Um, but I think for kind of your average, maybe especially just coming out of school, it's real tough right now. Um, because you're the easiest to be replaced.
Yeah, I think I agree with everything you said. So, and there a recharacterization of my opinion on the job market is necessary here, but yeah, um, look, I don't envy the position that new grads have. I actually, ooh, I don't want to be the bearer of bad news, but it actually breaks my heart the more I think about it. Um, so there's the bad news.
Let me give the
Too. I
stat.
just
The
gotta throw that
stat,
in there. Those poor people got to buy a house too.
yeah, the stat for
Yeah.
unemployment for
Really?
recent college undergraduates um, is 5.3, so above the average, and that's as of Q2. Um, as of September uh, 16 to 24, so youth employment, that would include people who aren't necessarily going to college as well, um, kind of the top end of high school. But most people would be either in college or about to graduate or just looking for a job is at 10.4, which is higher
Yeah,
than normal. So,
it's double digit, and
yep.
it's a real problem. I have 2 very strong opinions about the labor picture. One is that the labor supply dramatically decreased with the mass deportation, and I think it's skewing the real unemployment rate because those jobs, it did not increase the labor demand. Those jobs were not replaced. Many of them weren't. They're some of the blue collar, especially like construction. That's going to be the industry to get into. The With all the data centers and all of that, they've got a shortage. They're probably going to be paying out the wazoo for construction workers. If I had kids that were getting into the workforce, be telling them to pick up a hammer. And then my other is because of the bifurcated economy with that upper arm driving the economy, if these layoffs start to happen in that demographic, we're in for a world of hurt.
I would agree. Yeah.
So what happens when houses are 3D printed from that robot arm written by?
That's future. That's my nightmares, Michael. So we don't need to talk about that.
But those 3D printers, like it looks like a little crane robot arm that sits in the middle of the house and basically 3D prints in a circle around itself.
Yeah, I've
Cement
seen
walls,
some of
and
those
then
videos. It seems crazy.
It's pretty badass. I've seen it done with concrete. It's
yeah.
kind of cool, but I don't know how realistic or how long it would take for us to do that.
Yeah. I see Alloy
I don't
chomping
know.
at the bit, I feel like, to say something. The one thing I wanted to add about it.
I just had to come back at her hammer comment. It's always
Yeah.
going to be the next thing, man. It's
The one thing I'll add, just as context to this situation that I think might be missing for a lot of people is, yes, youth unemployment is high, but on top of that, you have the older, largest population segment phasing out. So you have more
Yeah,
workers leaving than
that's true.
entering, and they're already having low employment, lower than historical employment with the younger crowd, as the older crowd is starting to phase out. So it's a two-sided problem, and I see a lot of talk about the young-sided problem, but not the retirees.
Yeah, I guess I am chomping a little bit. I've got some thoughts about the labor market, and I want to use this time to kind of speak directly to people who are in college or thinking of going, and those especially who are graduating soon, right? Because it's a sensitive topic. To me, it unfortunately steps a little bit outside of just like speculative economics and like people's lives a little bit here. And I say this as an artificial intelligence researcher and engineer, right? I'll be honest. Like before I continue here, do I like interviews and what AI has done to the interview process? I'm not going to elaborate, but it's changed a lot. No, I don't, but I am fortunate, right? I got into an industry 10 or 13 years ago versus depending on if you consider my applied mathematics background leading into this or my actual applied artificial intelligence experience. I picked the right career, right? So you can take what I say with a grain of salt, or you can approach what I'm about to say with a certain amount of oh, this guy knows the ins and outs, and maybe he knows where I can gain an edge. And what I'm going to share here in a second is that latter half of my statement, which is like I want to give you the edge, especially the young people listening here. Look, I think AI has done some really powerful things, but what we see here ultimately in a quantitative dynamic, like if I were to zoom out and then ask the right questions with an omnipotent amount of data, what I would probably find is that we are in the most competitive employment landscape in American history, for at least for technology. And so, good news and bad news right now, this is pivotal for you. You can lean into the on rails college approach, which is like, hey, I'll go to school, I'll learn Java, I will pick up SQL, and then I'll get a job at Kohl's or at Fidelity or whatever. But the reality is, like we're discussing, those companies aren't hiring the same way they used to. So what are companies looking for? What do they want to see? They want to see young people who are using AI to propel their passions in a manner which separates them from the rest of the crowd. Okay, so what does that mean? I'm going to be, this is the hard part, right? If you are 21 or 22 years old and you are close to getting your bachelor's degree and you do not have a full product built, an application, a desktop app, a mobile app, a creative way of solving an established problem, if you have, then you're already behind. Yes, that's the bad news. The good news is you could have been doing this. You can be doing this. You can, because of everything we've said in terms of the lineage of this chat here with Terrified, and indeed, like Michael mphinance was saying that we kind of were chatting about AI in the beginning of this call. You could have made an application by now. I say that ironically because I just want to take a step back here and say that's not how I built Prism. It's so funny to think that I actually built it using I didn't use AI at all to build Prism. Like the algorithms that are used in it, the AI is like, it's so old and tried and true that it's actually back when we called it machine learning. Like I'll tell you right now, the
So
algorithm
I want to
for,
jump in quick. That's how I knew you were the real deal, if you will, because they called it machine. Like I still remember the first Microsoft commercial and they called it AI, 10 years ago, and I wanted to throw something at the TV. So when you said that, I was like, oh. Anyway, go on. Sorry.
No, you're on target, man. Like so I'll tell people right now, listeners, the algorithm we use to cluster open interest is called HDB scan. Read about it. There's great YouTube videos about it. It's called hierarchical density based clustering. It's a fantastic algorithm. These are the things that are that we're navigating big problems with. Generative language models and all that, large language models like GPT and Gemini, it's all great, but it's very interface heavy, right? And so those tools are primarily used to do the labor that we don't want to do, the syntax, the writing of the code, the API handlers. For those who are developers and nerds, you'll understand what I'm talking about. Do not use it to solve unique problems. That is your job. That is your job to understand what the human world needs, what problems it needs solved. That is your job. Go find out what those problems are, please. While you're young and you have a unique opinion and you're not, calcified yet, like I'm starting to become, um, go find out what people need solved and use AI to do the brute force work for you. And here's a surprise. Here's the good news on top of the good news, right? Managers don't know what the hell they're doing. Okay. And they're not going to learn. They have no interest in doing so. So you are ahead of managers, but you are in a rat race. And your only obligation right now, and again, this is more good news, is if you are a little bit competitive and you are still young and energetic, you have more tools than anyone in history to build that product. And even if it just ends up on your resume as like a line item, and it's not something that you sell to some venture capital fund, and it's fine anyway. In my opinion, venture capital is dead. Private equity is dead here in the next 3 years. Okay, as long as it's on your resume, and hiring managers are able to see that you took something like AI, like LLMs, and made it into a product that people want or that is interesting, you will stand out in a sea of candidates. And trust me, companies are still interested in investing in people for the long term. But what they see, and I said this as people, as an individual who has been in charge of hiring multiple times, I'll give you the inside trick here. Be self motivated, build something with the tools that you've got, and you will rise above, in my experience, 95% of the candidate pool. I can't tell you how much time I'm going to try to be polite here, but I wasted a lot of time with people who have not used their time to build things that demonstrate their willingness to solve big problems. So if you're getting a tech degree and you were promised a six-figure salary, you're going to have to compete a little bit more. But the good news is you've got the tools to do that. And I'm here now telling you that we will hire you if you demonstrate a willingness to solve those problems on your own first. And I'm going to end it here. Okay. This is going to make me sound old, but back when I was your age, there was no large language model to help me. Okay. That's take that with you to the bank. That's all I got.
There you go. I appreciate the light side of it because a bunch of what I'm saying is more dark, so I need the counterweight. But I appreciate it for sure. Um, we talked about unemployment and kind of I think we're all even with that statement, right? Pessimists coming on board. Uh, that requires a highly motivated person, right? Everything you just went through. Uh, and I know a lot of people, especially in prison, that are that, right? But I would say that doesn't necessarily apply to all kind of college kids just graduating. So I don't necessarily see this trend ending, but I do see it being if you're ready, like you said, if you're ready to go and hit the ground running, there's never been a better time. Um, so I think it's a double-edged sword. So I completely agree with that. Um, we talked about the employment data. We talked about inflation. One of the other things I wanted to touch on before I get your guys' outlook, and I know we're coming up on time, so um, briefly wanted to talk a little bit about the currency debasement trade. For those of you that don't know what that is, or I just spoke Spanish, that's basically betting against the US dollar or fiat currency in general in the form of um, alternatives, whether it be gold, silver. Alloy can't stop talking about silver, um, and other people I know. Maybe Bitcoin. I know Bitcoin got really beat up recently, but that would be another position that could do that. And then downside skew as protection. Um, so that's kind of at a high level what the debasement trade is, but gold and all those other debasement trades have really taken off this year. And Alloy was one of the, I mean, we were thinking about it around the same time, but the first time he started, at least for me, I don't know if anyone's been following me, but I made a shitload of money on gold this year, on gold calls. And I had owned gold in multiple different ways throughout this year, whether it be um, just shares or call options. But um, after I had longer conversations with him about it and read his macro posts around the same time that I had thought gold was really going to continue its trend. Um, and that's continued to happen. So I know each of you kind of have thoughts on this debasement trade and where it could be going in the future.
So I'll probably be the shortest, so I'll go quick. So, because I honestly did not know a whole lot about gold until about 9 months ago. That was one of my first days in Prism, and I listened to Alloy, and he made a post about it way back when too. And then shortly after, I met a trader who Terrified. He doesn't really post anyway outside of the.
He's
He learned to
brilliant.
trade
I know who you're
on
talking
the
about. He's
farm,
brilliant.
corn and wheat futures. Like, I mean, as raw as you can get. And he was telling me about super cycle and how, like, even though gold has been flying, that it's really just at the beginning. I just listened to smart people, man, and went to the smartest people, and then you were making a whole.
Dude, same. I just listen to smart people. That's all
Yeah,
I do. That's why I have you guys here.
if you don't know enough about it, that's why I say all the time, like, if you don't know enough, that's when you leverage people. Because I don't want to take the time to know about commodities in general either. I love Bitcoin. I can do a whole podcast about that. I've been there since the beginning, and I know everything about it. I hate the traditional financial system, but any other commodity, nothing. But listen to the people that do. Yeah, it's. And if you don't want it, like, that's what I was going to say. What Ali was talking about too, the new college kids. You won't. There's always going to be parts of it that you don't love, but yeah, when you make it a passion and you're trying to solve a problem for yourself and something, something like that, those kind of people are always successful. And there will be some stuff in there that you have to mix in your skills that you're not necessarily love. Like, I never thought I was going to be a writer. I don't love writing, but my mom was an English teacher and I learned how to do it. Um, you know, but I do love the numbers part of it. So I'm glad that I know how to communicate that part of it now. So there's always gonna be parts of it, but it's just, yeah, listen to the right people for the parts you don't want to do, man. Like, I have zero interest in learning about. Anyway, I'll let Ali talk about it. I learned it all from him, and then I just stuck my money in. And that was 100% to go. And I actually ended up swinging like Kinross Gold and stuff like that because I was doing some top trading stuff at the time too. So I didn't do it on GLD itself, but
I guess before anyone else goes, I told her that I would tell you, and I know Carly, you said you're also interested in like commodities trading. I love Swing. Swing is, I love having conversations with Swing. Swing loves you and she appreciates you a lot. And shout out to Swing. I love having
I
her
agree.
around all the places. She gets me to think outside of the box or necessarily where I was thinking. So appreciate her. And I know she's
Yeah,
big on this kind of trade as well. So I'll let you guys go.
I love trading commodities, and ETFs were like the best thing to happen in my life ever for this because, yeah, old school, trading real commodity futures is just a whole different beast. But I stay quiet on it because anytime I talk about it, it doesn't ever really get traction. So I don't really bother. I love to trade oil. That's one of my favorite things to trade. I know oil. That was actually my very first office job, was working for, some of you may know this, be old enough to know this name, Texaco was my very first office job. Which now they are Chevron, but the ETFs
I
make it
am
so
old
much
enough, by the way.
to know
Just as you
Texaco.
are old enough to remember Scottrade, where I used to be.
Yes, exactly. Yep. The ETFs just make it so fun because there's so many different ways that you can play it. I love it, and I love the metals. But I watch all commodities. I watch lumber because I actually have a construction background, come from a construction family. I love commodities. And like I said, ETFs and leveraged ETFs, that was like hitting the jackpot for me. I love that stuff and I love trading it. It's really fun. That's my take.
Yeah. I'll start by saying I don't have a lot of exposure, literally or intellectually, to like leveraged ETFs. For me, they're new, and new things can be scary. And to me, as someone who has spent a lot of time studying like the options chain and the math sort of behind your exposure to theta versus a particular sentiment driven by a strike, it's just the convexity of options has always been very attractive to me, and I've always found a way to get what I need from them. But if Carly says that leveraged ETFs, whether it's inverse or bull, are worth checking out, then I think that's the final straw for me. I'll have to spend some time absorbing information related to it, or mathematically understanding it a little bit more, how it fits into my portfolio. Commodities though. Look, we're in a cycle of deep tech, whether you're talking about space exploration or robotics or solar panels or chip manufacturing, diversified chip manufacturing. So, like, just anything outside of Taiwan semiconductor manufacturing. We are in a world where advancement in deep tech applications is critical in ways we probably can't even understand, that are classified probably to some degree. Right? We have a lot of need for silver, gold, copper, palladium, and iridium, and these are all investable. All right. Now that's just the scientific. In the silver bugs world, those who buy and collect and trade silver, there's always been this argument. It's like, why silver is the question. It's like, why not buy an ETF, or why not buy anything else but silver? And they'll, 10 years ago, they would have said the same thing they'll say now. It's just the response is different. They would have said, oh, well, silver is used in semiconductors, it's used in solar panels, and it's used in, antibacterial medical equipment, etc. It's an industrial use case. And people have been like, yeah, but like not enough to provoke a demand, right? Not a demand that the market can't account for. Thus, there's no edge, there's no alpha. And the answer for the past 30 years pretty much has been yes, that's true. Not enough to create an edge or a volatile quantity of demand. There are some exceptions, like if you look at the Russian oil crisis, I think it's 2014, you'll see a big spike in silver, but those are blips, right? That's volatility, and those are sort of black swan events. Generally speaking, silver and gold do not react to a whole lot. However, it's different this time.
I heard that one.
Yeah, the question, is it different this time? Yes, the answer is yes, it's different this time. Look, we've got a lot of industries that are competing to go to space to create satellites that do different things than we've ever had satellites do and operate on behalf of. We've got Less silver to go around, more global competition, more isolationism and populism, and then the fear of things like the old-fashioned Americana hedge of gold and silver. It's like, I don't trust the government. I don't trust what they're doing with my money. I think inflation is always around the corner and it's worse than people expect. Once again, if you look back 10, 15 years ago, those people look like doomsday preppers. It's not really the angle I take with it, right? I think that more Americans than ever are afraid of inflation, and that probably is like 25% of the beta in silver, if I had to guess. But mostly, I do think it's scientific application and the rat race to compete against other countries who are also using silver to domesticate huge technical achievements, right? I think gold's a part of that. It's historically and probably will continue to be less volatile. So here's what I say to traders of commodities, especially those of you who are new to it, right? Some really cool insight is people talk about volatility. It's like, oh, when we dip, volatility compresses afterwards, you buy calls or whatever. Silver is more volatile than gold. Buy silver at a dip, all else being equal. And once you're up on silver, go ahead and move it over into gold. And then you are shorting vol. You start by longing volatility with the silver trade. You migrate your gains into gold, and you're shorting volatility at that point, preserving your wealth into something that's a little bit more stable long term. Um, all this has industrial use cases. All of it is an inflation hedge. And I think that there's a corner of this conversation that I'm still really curious about since the inception and the white paper, and that is Bitcoin. Right? Is Bitcoin is technically a digital commodity. I will say this. Right, I'm a big fan of Bitcoin. Bitcoin bought me my first car that I purchased with my own money, at least. I love. I'm always going to have what Bitcoin represents. So I just want to give you a little bit of background here so you believe or don't believe what I have to say about it. I have benefited tremendously from the early stages and price action of Bitcoin. All right. That being said, where we are now after a lot of institutional ownership and hedging, I think Bitcoin is mostly going to be a vehicle for liquidity, which could even explain why silver and gold have been largely unleashed recently. Because remember, naked short selling and shorting of gold and silver has been a golden goose for decades for reserve currencies of all kinds all around the world. And that's been a problem. And Bitcoin has no industrial use case, like, period, right? It is a store of value. And I believe it's an important store of value, but you can't make satellites with Bitcoin like you can with silver and gold or conductors or anything like that. So I think Bitcoin will replace the short selling liquidity, more JPM sort of illegal printing of money that they were using silver and gold. If you don't know, JPM has been sued for like $190 million in the past for illegal short selling of silver and gold. All right, it's a big thing. They get slapped on the wrist. And the reason why it's not a big deal and why people aren't in prison is because it actually provides liquidity for US markets. So it's illegal, but it's all right because they're providing liquidity. That's sort of the agreement people have culturally speaking. I think that they're going to start using Bitcoin to do that, which is good. Because it frees silver and gold to have actualized value in terms of their industrial use cases. And I think that Bitcoin is a perfect synthesized cash settled vehicle to provide liquidity. Does that mean the Bitcoin price is going to go down? Only when they want a dip so that it goes up more and they can get that liquidity that they want. I.e., if you look at historically how silver and gold have performed, I think that's the role that Bitcoin's going to take in the future. So it's not going to move a lot. And I think silver and gold are going to move quite a bit because we actually need them in the real world to perform certain tasks that make us competitive on the global economic landscape. So that's my opinion on commodities.
All right, appreciate it. We're definitely coming up on time. If anyone needs to jump, feel free to go. The last thing I wanted to talk about was just kind of a market outlook for 2026. I feel like I'm seeing things all over the place from we're gonna pop off top and we're gonna have an amazing year. Granted, some of that's from the White House, so I don't know how I feel about that. But I'm seeing I track forecasts from everyone for my job. So I'm seeing even the past 3 years, I would say, everyone has forecasts all over the place since 2022, which tells me no one really knows because some people are right sometimes and wrong other times. But I think 2026 is especially challenging to forecast. So I wanted to get your ideas of what are some of the biggest risks in 26 and maybe some of the biggest opportunities in 26. Whoever wants to go first can go.
I'll go because mine's going to be probably fairly quick because I have no confidence to have a conviction in what's going to happen next year. There are way too many uncertainties. There are way too many if this then that scenarios for me to have strong conviction in what's going to happen next year. Rates, FOMC, we're going to get a tariff decision. If that were to be struck down, what a shit show that would cause. If tariffs had to be backed out of. Plus, Trump's a wild card. You can't deny that. Who knows what geopolitical relationships are going to be like next year? There's just way too many ifs and ands. So for me, it's going to be adaptability and just, head on the swivel and be ready for anything. That's my conviction for next year.
Awesome.
That's all.
Who's going to go first? I'm waiting to see who unmutes first.
You or me, Alloy? What do you want to do?
No, go ahead. I think I've got my ideas, but yeah, please.
All right, yeah, and I'll be pretty short too, because anybody who says that they know what is coming is an idiot. No, I can tell you, like, as far as like where I'm DCing, like I like small caps, international and emerging. Beyond that, I really have no idea. Now, the one thing I've been trying to look into, I guess, a little bit more, especially given my personal situation with work and whatnot, is a lot of the U.S. growth and really a lot of the whole bull market really from 2023 on was heavily supported by the labor supply growth. So immigration, in other words. So with tightening policy, these labor shortages, if they return, is that the S word that Carly hates, so I won't say out loud, that I guess I quote unquote fear most as far as that part of it goes, because the labor market's not going to know what to do if I am right about that part of it. I mean, beyond that, certainly utilities, nuclear, any of that power.
So I'm hearing energy.
Yeah.
Energy
I
for
mean,
26.
I love energy. I'm still like the obvious ones are, MBIS, and like I like Galaxy Down and Helios. Some of that cheaper energy, especially the data centers. While you were muted, I was half joking, but not really. Like, why aren't they doing some of these data centers in space, both for cooling and for solar power or something?
Bro,
But
he sounds like the animals.
but I was looking at like, or even wind, or I'm sorry, wave power, stuff like that. Some of the ocean stuff. But I think some of those other out of the box alternatives, maybe something that none of us yet. Outside of all that, but we got to figure out something there. Tony Stark with the
You and the
world
animals
could
got to
use
link up
it
about
could use
space
unlimited
solar.
power. Something the whole world could really use. It's but it yeah. Well, in the space solar, like I guess I just always pictured having the computers in space. You got the solar power, you got automatic cooling, you got but yeah. Anyway, certainly just alternative energy. I don't know if winners are yet. Like I've made good money on Nebius this year and some of those other ones, but I don't know if we found the winners there yet. But yeah, not underneath this administration. I certainly talked. Long term, I've been sticking some money into oil. I stopped trying to guess which company. Again, not my forte. It's something I just learned over the last year. Is if you're not good at that thing, I either find somebody that is, in the analyst, he knows Oklahoma Gas, stuff like that. But otherwise, I just find the good ETFs, and I go with those. But I do think at least long term, we could be at a really good opportunity there to depress prices. But that's not going to be 2026. So
Yeah.
I'll let you go, and then I'll give my opinions. I think we're pretty aligned.
Yeah, I'm really excited to hear yours too, because you've been such a good listener this whole process. But I think, right, Trump has said he wants to oversupply oil. So I'm looking forward to that because it's going to be a generational dip buying opportunity. I've been averaging down on a specific company that I'm not going to mention here just because I don't want it to be seen as an endorsement. But if you've been following me on After Hour or you're a part of the community, you know which bridge I'm trying to walk across to get to my land. And
I'm sorry, I'm laughing. I know. Okay, go ahead.
Yeah. Yeah, a little Easter egg, but look, I'm not here to endorse any specific company, but I think there are companies that are very well positioned to take advantage of what I hope is not an impending energy crisis, but it's hard to believe it in the world where Flint, Michigan is out of water and Texas runs out of electricity in their grid during minor storms and big storms alike. And then we're talking about AI data centers in Portland, and I mean, we've got not even in major metropolitan areas necessarily, but anyways, we definitely have a need for a more resilient, more sustainable energy grid. AI is hungry, right? So I think energy is a big play for next year. Uh, the S word, I'm going to assume it's stagflation, right?
That's what I was.
Is that correct?
Yes.
Okay. Yeah. Look,
that one and compression are the two that I try and avoid. She doesn't like it. Like I saw SQQQ compressing. The ATR was compressing, and nobody believed me on it. I'm like, that is not a good thing to be compressing. Anyway.
Oh, sorry.
Yeah, well, I mean, like, so I'm bringing it up for a reason, right? I think stagflation is the best possible outcome for 2026, but I agree with mphinance. I don't know what's going to happen. I think it's crazy to think you do with all the different variables at play here, but I'm a firm believer that we're we need more energy, and I think that he wants to have his cake and eat it too. He wants to lower rates but keep inflation low, and the way to do that, at least in the very very short term, and as far as our lifetimes are concerned, is to lower the price of oil. That'll offset the inflation that's caused by a demand supply imbalance
Yeah, I
from
wonder
lower
where that's going to
rates.
come
So
from.
that's
I'm
yeah.
really
Well,
scratching my head
Venezuela.
right now.
Yeah, there may or may not be an insurgency on Venezuela as we're speaking in this podcast episode. It's who's to say, but yeah, I also think I'm glad you actually mentioned that. I do think we cozy up to Saudi Arabia more. That's on my bingo card, and I think that there's a lot of AI companies and talk about NVIDIA and stuff, and there's sort of this distracting conversation about NVIDIA versus Google, which I'm very excited about in a reality television way, especially as an ML researcher. But if I'm honest, I'm more interested in who has the data to power real long-term use cases. Like, I'm not interested in the app that generates the most accurate image of a human being or whatever, more convincing video. I am most interested in who's going to use dense algorithms in large computational capacity to drive meaningful risk analysis results. And then when I use fancy words like that, there are a couple sectors that come to mind. One of them is robotics. One of them is um, defense manufacturing, where precision is really important and stuff like that, and like quality. Chip manufacturing, so that's the TSMCs, the Broadcoms, et cetera, of the world, and you got some burn-in testing companies that do.
Broadcom,
I'm
what?
pretty.
You said again?
But just the typical chip manufacturers, but also there's some burn-in companies that like do the testing for those chips to make sure that they're viable long term. And that burn-in testing is like super important if you're trying to shove that chip into like an F-16 or something like a fighter jet, or an autonomous drone. You can't have that chip overheating. So who tests those computer chips? AI drives a lot of the value for those companies. And then lastly, or perhaps last but not least, is healthcare, right? They have a tremendous amount of consumer data. How many Black and Milds your neighbor has bought at the store this week? How many, there's just all these little pieces of data that these companies have, and these healthcare companies have not really been able to make use of that data. And we're headed into a world where insurance is going to be cheaper or more expensive depending on your habits. And that's going to be more atomically quantified based on the enrichment of data pumped into AI, machine learning algorithms. And I think that people are like, oh, why hasn't that happened yet? It's like, well, these are these aren't tech forward companies like the UNHs or the Gilead Sciences of the world or the Pfizers. They're very slow when it comes to this kind of thing. So when you think about who has the most upside, yeah, I think looking for discounts in healthcare, energy, as finance talked about, and those are the big ones, frankly. Yeah, I think discounts in healthcare and energy are the ones I have the most conviction on going forward.
Awesome. All right.
Yeah, and, sorry, I love the sciences too. So Gilead and Exact Sciences, I got lucky, but like any of those, I think are going to see the most cost savings. But anyway, sorry.
No, you're good. I appreciate the insight. Um, I figured I'll give kind of my outlook as well for 26. Um, I'm open to one of the things that I've kind of changed about myself this past year is being, I don't want to say more open-minded because I don't think that's the right way to do it, but considering a plethora of different possible outcomes kind of on like, think about the options chain. It's basically you're betting on different potential outcomes over a period of time. So that's how I've started to think about the market a little bit more as a whole and different potential outcomes. And I think the market is really heavily based on kind of where liquidity is and and it's ultimately a supply and demand vehicle. And if you have liquidity to continually bid up these companies, barring no bad news, that's just kind of how the markets work in general, right? No news, you slowly creep up because who's going to sell if they bought for a lower price? So I think that things like rate cuts, ending of QT. I think all of those things are potentially going to add to liquidity here going into the end of the year and early first 2 months of 26. I think there's $8 trillion in money market right now. I think that as you get interest rates to start to fall closer to in line with inflation, investors are forced to other asset categories. If you can be in cash and make more than inflation from a risk adjusted perspective, it's a no brainer, especially where we're at in valuations and volatility. The risk adjusted metrics for cash are way better because they're above inflation right now, CPI, not necessarily PPI. But I think there's still room for cuts. I'm ultimately bearish. I think I told Dan this, Dapper Dan in Prism, love Dapper, shout out. But I don't think you give me 20 minutes with someone, I don't think I'll convince them to be a bear for next year, which is I'm open to bullishness if we can find liquidity elsewhere. I'm just struggling to see a world where we continually find liquidity throughout all of 26. And I think that the next Fed chair is really important. I think what the next Fed chair says leading up to Jerome's departure will really, I think March and April are going to be a pivotal time because we're going to have either liquidity have already entered the market or be forced to enter the market outside of cash. And then what comes next? Companies start to re-leverage in January, so there will be liquidity flows from that. But I think we could start to see liquidity issues throughout all of 26. And I think that will either come in March or April. or when the new Fed chair actually is in, they can keep cutting, God forbid. I know how we all feel about continually cutting, but I don't think they care. And then I think we could extend that problem out towards November. So I'm ultimately really bearish, and I think once you get a start of a deleveraging, the Fed will have to backstop the economy eventually. But there will be pause because of what happened in '08, and they'll pause, and I think that pause will cause a lot of, or they'll have to think about it a little bit harder potentially. I think that can drive the markets down even further. So ultimately, I think there's a huge amount of risk going into 26 throughout the whole year, with massive opportunity on the tails of the options chain. I think we're going to see crazy high volatility to the upside or the downside. I'm leaning more towards downside, but I'm definitely open to going up relatively high before we go down. And I think it all really is globally tied to different levels of liquidity. And I think that other global macro events could very much line up with struggling times in the US. So if I'm thinking about China versus Taiwan, right? I'm thinking that if there's a time to do it, it's when there's internal stuff going around in the US. And I think that if unemployment continues, kind of bringing everything full circle, I think if unemployment for the most aggressive demographic of the population continues, I think there will continue to be more public outcry. And I don't know how that, I think we'll start to see public anger towards Mag 7 if the wealth gap and unemployment get worse. And I think that there's no good situation to get out of that. And I think there's almost no chance it doesn't come by 2027 at some point, but I think it could come in the end of 26. I know I just unloaded a lot at everyone, but a lot to digest, and I felt like it was a good place for me to kind of end my ideas and see if you guys have anything to add to it or any thoughts about it, and then we can wrap this up.
Yeah, I mean, obviously, I hope you're wrong about the end of that. But
God, I hope so. I really hope so.
Yeah, right. There's a lot of intervention that goes on behind the scenes when stress levels in the lower echelons of American society kind of elevate. But we do have there's a pretty bad cocktail where education is very expensive, healthcare is getting expensive, but you can even see this now where allegedly Trump is doing things to lower the cost of healthcare. I don't know what the impact of those legislative decisions has been, but a rumor is he's trying to lower the costs, right? I don't know that education will get cheaper, but I know that historically speaking, and I'm talking like centuries old information, is when education gets prohibitive and healthcare is not guaranteed. That's usually when the streets get angry, and wealth disparity is built atop those things because someone's benefiting from those things. So, um, uh, I, yeah, I don't know. I think it's funny. I was just talking about the healthcare alpha with AI and data, and we've got that recent, pretty recent thing with Luigi and the UNH CEO in broad daylight. I think that
And I
you could,
completely agree
I could,
with that take, by the way. I think it's ultimately great for UNH, but
yeah, I mean, there's the biggest healthcare insurer in the world, so it kind of is outside the scope of one behavior or action by one individual. But let's just say, both groups of people making extreme claims here about the future of populism and its effect on America are probably going to look pretty dumb here. People who are in the middle are probably, in my humble opinion, closer to being correct as we move forward. Whereas like it's not going to be the end of the world. You could even argue riots and protests are a part of American culture and history, that we vocalize our concerns when we're upset in this country, and it's a part of a democracy. Um, for better or worse. But I think that there's a lot of intervention. The government actually has a pretty keen interest. Shout out Palantir on monitoring our mental health and our situational awareness for our own well-being. And I think that the government is pretty keenly interested, as well as working closely with corporations to make sure that our needs are met. So every time things can get bad, but to me, when they do, it is a sign that a massive failure in both intent and engineering has occurred. In that, for that reason, it should be exceptionally rare that we throw ourselves into the pits of chaos with protests and unrest. Right? That is in no one's best interests. Not even for conspiratorial martial law kind of reasons. So I don't think it's very likely. But if it happens, it'll be because someone failed massively at their job to stabilize systems accordingly. So we see that intervention happening today, and hopefully it pays off. Right. That's my hope as a citizen of the country and an investor.
I completely agree. I mean, that's my hope, right? I feel like my whole thesis is pretty much behind that we don't have anywhere to go with interest rates. Like, if inflation is prevalent, and if cutting ultimately doesn't lead to more employment, which I think is going to be the case, I don't think cuts will help employment, and I think that will have us, as I game theory it out in my head, there's things that can be done, but ultimately you will then either get to a point where there's rates are too low and inflation comes ripping back, or you didn't cut enough to get jobs stimulated. And I don't even know if there's enough cutting to get jobs stimulated, but I think they have to try. So I think their hands are tied around that. And I think ultimately that will lead back to inflation, which will then be bearish regardless. I don't see a path out of bearishness. Maybe, hopefully not the ending part, right? Like, that's worst case scenario. But I don't think there's necessarily a path away from bearishness in 2026, leading into 2027.
Yeah, a bit of historical context with the Fed and sort of Jerome's slights against corporate America, right? And I don't blame people if they don't remember this, but back in December 2024, Jerome started this this narrative against corporate America, where in every speech he gave for FOMC and in between open market committee meetings, he would say, like, hey, if you guys want to lower rates, prove to me that you'll do hiring. Start the hiring now. And he wouldn't say it exactly like this, but in pretty much no uncertain terms, he would say, if you want rates to be lowered, start your hiring process now. Prove to us that inflation is not your primary concern and that you have the budget to do so. And the corporations, I think, want to do that. That's their traditional way of playing the game and negotiating with the Fed. And they hear that, but the issue is the tariffs. And they're like, we don't want to hire in case we need our cash reserves to offset, consumer pricing. And now we see that that's been the case, right? PPI has gone up, whereas CPI has basically, for once in history, been like a lagging indicator instead of a leading one. And so the Fed was doing the right thing, but maybe the sort of the old-fashioned way of approaching that conversation, the corporations are like, hey, we would love to do that. But the problem is we don't know what these tariffs are going to do. So we're not going to hire more people. And as a result, there's this unintentional game of chicken being played between the Federal Reserve and these corporations. And the corporations have won. And like you said, we're going to find out if they kept their end of the deal, which is like, hey, the Federal Reserve's like, all right, look, we see where you're coming from. We've lowered rates. It doesn't matter why. Maybe it's because the big guy in the office, or maybe it's because we felt it was the best decision, or a combination of the both. But the point is, we've lowered rates now. So please hire people, okay? And now it's going to be up to corporations to say, yes, we'll hire people. We understand our cost of production, and we know what the consumer is capable of dealing with. And here's the bright side. If we hire them and we give them wages, maybe CPI won't matter as much. Yeah, they can spend. Exactly right. Or we're going to find out the limits of American greed aren't as low as we thought. And corporations will say, get bent. we're taking the money and we're eating our cake too. That would be, of course, the worst outcome. And I have trouble consolidating that with the willingness to foot the bill with PPI. I don't know why the same corporations would foot the bill instead of passing it on to the consumer. Well, I guess maybe survival. I think it's 50-50, but the optimist in me says that they're going to hire, they're going to start offsetting the PPI. They're going to export the PPI risk onto CPI here. The market's going to react to that, and we're going to see some lateral moves forward, and the chart's definitely going to go right, hopefully up, but it's not going to be as quick as people thought in 2026. And then I think you're right. The second the Fed says we're not going to lower rates this time, and who knows what the rates will be when they say that? Maybe it'll be 2.5.
Yeah, exactly. Like, to be clear, the other part that I didn't say, because just to make sure it's crystal clear, if Powell was staying, I don't think it's as much of a problem. But I think because he has to be out and there has to be a replacement, and they're so keen on supply side that they will cut. That's pretty much
Yeah,
what the whole
no, I
thesis is
agree.
about.
And there's a floor to that, right? And so
Yeah,
whenever I remember December and the peak of COVIDnomics, the two things that dropped us really suddenly were that we had been cutting rates, and then suddenly we stopped, or we went flat
we
on
can't
the
go
rate
further down.
decision.
There's only so far you can cut. So
Yeah, and the market prices that in until they don't. So
yeah,
that'll be something I'm looking forward to as far as risk management goes.
I do want to open it up to the other two just to see if you have anything to say about it. I know we went way over, so I appreciate you guys taking the time.
I think from my bleeding heart side and putting away what the market's going to do, I am very concerned for the bottom half of the K economy right now. I'm very concerned with a large demographic subset. But I just think, and it's kind of, I sadly think this, that the market doesn't care
Doesn't
about
care.
that.
Yep. I actually
It's
completely agree. It doesn't care until the top 50% of, or the top 10% are doing 50% of the spending. Once that stops,
that's ex-
that's what it cares about.
that's exactly right. And so I think that's why I'm having such a hard time finding conviction next year, is because it is a a very delicate economy when it's all being ridden on 10% of earners. That presents a precarious situation where we're having to rely that 10% is going to stay um, uh,
That
still
pie of
funding
spenders. Yeah.
everything. Yeah, exactly. So I'm a little bit scared for our country as a whole, to be honest. Um, that's just personally, that's my bleeding heart side.
I'll try and end it a little bit lighter for you, Terrified. You know, because I do share all of those feelings, but at the end of the day, I guess you know, and I'll share in here real quick. I am an alcoholic and been in recovery for quite a while and stuff like that. And one of the best things I've gotten out of it, and I can apply it to the market here, it's all of those things are things that I still cannot control. What may or may not happen with all of those. The one thing I can't, I just keep looking for innovative leaders. Like I love small caps. Keep looking for good leaders that are changing the status quo and changing a certain sector or the market or something like that. And I think you still will get through as an investor just fine. But I mean, that's just how I've had to attack the market for a long time now, because while I agree with all those things and you can plan for them, portfolio, and that's why I love following Carly. He said, follow the right people. I just do what she tells me to do for that kind of stuff. I'm not good at it. So it's, you can prepare for it all you want to, but you got to have some conviction. You got to do some research and find the best leaders out there, because their stocks are still going to go up regardless. Just like the market isn't going to care about the job market or the job reports as much. The good companies, it's going to not care about either. They're still going. That's just.
I agree. I think there's still going to be opportunities, and I think
Oh,
ultimately, I think
yes.
index investing is not going to, or passive index investing is not going to be the
So
way.
and that was the post that I think that I was referring to way back at the beginning that Alloy made. It wasn't just about gold. It was start thinking about other stuff
Other
now.
things, other stuff,
Not index
specific
investing.
things. Yeah,
Not
specifics,
just
not
find something that
not
works for you. It doesn't matter
60/40.
what it is.
That's
If it's
dying.
VIX for her, then do that. If it's gold, and commodities, do it. For me, I am an equities person. Like it's. Yeah, find your thing. If you're doing something that doesn't work, then move on. It's just,
Well, it's even
yeah,
just branching out within equities, like this really young retail trading demographic doesn't even know what blue chip stocks are. It doesn't
is
pay
that like
attention
Bluetooth?
to, yeah, exactly. They don't pay attention to the Dow. That's the boring trade to them. And I
Well, I know 75% of this call loves Broadcom, and that's as blue chip to me as you can get.
Bro, best stock in the world. You can't convince me it's
But
not.
yeah, but you're right. It's the Meg 7. Like they are kind of ignored. They
That
aren't
is
talked about
7
as much
stocks
as far
out
as.
of 500 in the S&P. There are 493 other stocks out there to trade. And I would encourage people to do some reflecting on this year and look at their ports and compare if they were actively trading a stock as opposed to just buying and holding it. I encourage this with the ladies that everybody should have a buy and hold account with just good stocks in it that you're not trying to actively trade all the time. And like my number one stock for next year is going to be Walmart. That's my pick of the year. I think they're going to have a really good year with everything that's supposed to.
They're giving Amazon a run for their money with Plus, and they're expanding to more and more places. And as some, yeah,
Absolutely. They're hitting the AI side of it. They're hitting the digital advertising side of it. I am an avid customer of theirs. The new neighborhood market thing and that whole system is flawless and so impressive and growing exponentially fast. And then the farm trade, I think, is going to be something good. Trump has to do something for the farmers because they voted him in and they are hurting right now. And so he's going to
not
do
here.
some kind of, who said that and where's here?
Wisconsin dairy farmers, corn farmers.
Oh,
Yeah, farmers run here. They pretend they're hurting all the time, and that's why they have all.
That might be a
But
our
we
discussion
won't
for
go
another
down that
time.
rabbit hole. So
Yeah,
yeah,
that's a whole rabbit hole thing. And we are 2 hours and 15 minutes, which is
dang.
45 minutes longer, but I think we're all
longer. Okay,
junkies. So,
we can wrap up then. Yeah.
yeah. So let's wrap it up here. I wanted to give each of you, just because you all have your kind of own platforms that you are a part of. I know we might dabble in each other's a little bit, but wanted to give you each a chance to talk about where you spend most of your time and how people can find more out about you and what you're doing. Let's go right to left this time. So go ahead, Michael. Tell us about your Substack real quick.
All right. Yeah. I mean, it's only a week old. All I'm trying to do a little bit different with it is I'm using this coming in from the Substack to actively trade and build a fund within the LLC and make it completely open source. So just trying to do something a little bit different, I guess. But otherwise, I'm still posting on after. So
Yeah, It was an easy
Yeah.
subscribe for me. It was cheap, and I enjoy the content you put out, and I think it's really informative and helps me.
Yeah,
So,
and I think most of it, I put everything most of it out for free anyway.
yeah, so I think it's great.
Yeah, thanks.
I'm not a huge social media person, but I try to do but I am an analyst in the kingdom, and I know I say this ad nauseum, but always shout out to the ladies. I've been trying to build a group in there just so we can have our own space. So anybody interested, come join us. It's just nice to have some place to talk stocks with other women and to have the support, and it's fun too. So the kingdom is probably where you'd most find me.
Yeah, and I can say Jen, Swing, and you make a pretty. I'm sure there are others, but those are the ones I know. Pretty,
Yeah, it's a
pretty great
pretty
group.
good group.
Yeah, and
Yep.
and I love the Kingdom. I think they have a different kind of approach than what Prism has. So that's where I spend my time, is both of those places a lot. But I think um, there's a lot of young people in the Kingdom focused a lot on TA, and I think they do a really good job. And it's nice to have macro people like you and others in there to kind of help the non-macro people in there. So I think it's a great place.
I agree.
I should have mentioned I'm a member of both. So I love both communities
I love
as well.
both as
I think
well.
you and me are the only, some of the only two at least that are in. But
Yeah, if
I
people
love
try to
both.
trash either of them, I'm like, you don't know what you're talking about. So, all right, tell me about the bubbles.
Yeah, well,
No one calls it
yeah,
that
I'll let people
anymore,
just.
actually, but
Nah, you can find me. There's links on After Hour. So I'm on After Hour a bit. I try to give people breadcrumbs and macro posts on there, and consider the long term. Have discussions that are fruitful. Big all capitalization enthusiast over here. Um, but in my bio, you can find my links to Twitter and Prism itself. So on Twitter, I'm alloy20. Or let's see, let me double check something. But look, I spend a lot of time day in, day out, 24/7, just about. My entire life is about fostering a community of traders and investors in Prism. A lot of really intelligent people in there. And like I said, I'm really blessed to be a part of a community that I had no expectations for developing. It's really I haven't said this phrase about anything in my life, but it's a magical place. Um,
well,
my
you're about
Twitter
to
is
see another magical
alloy33.
place. You're about to go to Disney. Another
Yeah,
magical
well, I don't
place.
think it's.
Not maybe
Yeah,
not
maybe
quite as
Disney will make
magical.
me as. Maybe they'll make me as much as SPX calls for some reason. I don't think so though. Alloy3301 on Twitter if you want to follow me. Sometimes I shit post. I made fun of the CEO of Microsoft recently in a tweet that's, it's not really fruitful discussion on there, but follow me if you want to support and see what I'm about. But yeah, reach out to me on Discord, Alloy2077. And that's about it. Talk to me. I'm very open about things. I'm very good at what I do, and I learn a lot from the parts of the community that look at things differently than I do. So that's the whole meaning behind the name Prism. Shine a bit of light through something with a lot of facets, and you see every angle to things, and that's a beautiful part of a community. So, like I said, very blessed, and hopefully anyone who's interested feels the same way. So
Yeah,
shout out. Thank you,
awesome.
everyone.
Yeah, what I would say about Prism, I spent a ton of time there. Um, I think they're the one kind of thing on After Hour, at least about it, because this is one of the places I'm posting this podcast, is people think it's only zero TT. I partake in 0% of the zero DT. I am purely there for the mental stimulating, like macro discussions. It's fun to watch them all make money, and I'll pop in every once in a while and be like, I know you guys are printing money. That's awesome. But I'm there for like these high level discussions, and some of the smartest people I ever talk to about markets, and I'm in the industry, are in Prism.
Ditto.
So it's not just a zero DTE place, and I think sometimes it gets that rap, but I am there for so much more than just that.
Appreciate that. Like, you feel free to edit this out, right? But I've been thinking about this a little bit, and trading on a short time frame it takes a lot of confidence, and you've got to be very good at it, or you're going to find out really quickly that you don't know what you're doing. I love that personally about it. It filters out a lot of the BS. You're either doing it right or you're not. You'll find out very quick, and we're very very good at it. Now that being said, it's the flashiest thing. So two things are true about that: is not very many people are good at it, and so those who are will stand out. That's the first thing. And then it's very flashy for maybe the wrong reasons, but of course, making money quickly looks easy. It looks fun, and it looks very reproducible. The reality is, though, that we're constantly studying markets, regimes. For example, like right now, we're in a very low volatility regime, so we're very range bound up until December 10th. No coincidence that's FOMC, right? And so we measure these things, and we got very good at it. And yes, we're making a lot of money in very short time frames, sometimes exorbitant amounts of money, and that is all very flashy. But none of it is possible. None of it without an understanding of the macro landscape. It would all be guesswork if we were not thinking long term.
Amen.
Amen. That is if there was one thing about Prism I wanted to get across on this podcast is that they're only good at it because they get markets in general. It's not like they're looking at something only that day and they're like, okay, this is what's going to happen today because that's what the lines are telling me.
Hey,
It
now,
is so
I
much more
use
than
Prism
that.
for small caps in the morning, and I do just that. Thank you very much.
All right, that's enough. That's enough praise of Prism. Well, I love the place. I love all of what you guys put out, and I really appreciate you guys spending way more time than I asked you for, and hopefully the community enjoys this and drives engagement for you guys.
Well, I enjoyed it, so thank you very much. And
I did as well.
Well-
Thank you, gentlemen, for involving me. This was really cool.
Yeah, I enjoyed it a lot. I hope it drives engagement for you, Terrified. I know you're going to spend a lot of time editing this, especially with the three of us. You're going to spend a lot of time editing this.
I am not
so
editing
thank you so
any
much.
of this.
And
I
he
think it's
just
cool
posted it in 3
to get
minutes.
it raw. I think that I appreciate you guys. None of this is for me. I'm a market junkie. Shout out to the analyst who feels the same way about this kind of stuff. Like, I could sit here until like 2 a.m. talking about this stuff. And the only reason
Me
I'm
too.
stopping is because it's way too long and people need to listen, have an end point at where they're listening.
It's funny. It's the one reason why I don't talk to you more, because the time that I talked to you, we did talk for like 4 hours until 2 a.m. And
Yeah.
I just know that I will, so I know I can't.
Exactly.
Really.
So I'll leave it with this. I really appreciate everyone that tuned in. Unfortunately, I can't really make this a regular thing, but I felt like it was a really good way to kind of wrap up the rest of this year, and give insights onto what some of the smartest people that I know are thinking about for next year. And I hope that this can help you create your own convictions, your own theses. And like they said, and including myself, feel free to reach out at any point. I think pretty much everyone here is here to help.
Yes.
And